Banks play a crucial role in the financial system by facilitating the flow of money and providing various financial services to individuals, businesses, and governments. Here's a general overview of how banks work. 1. Account opening. Individuals or organizations approach a bank to open an account. They provide necessary identification and complete the required paperwork. This can include personal details, proof of address, and other relevant documents. 2. Deposit placement. Once the account is opened, customers deposit their money into the account. The bank records the deposit and updates the customer's account balance accordingly. 3. Reserves and regulations. Banks are required to maintain a certain portion of customer deposits as reserves. These reserves serve as a safeguard for customers and help ensure the stability of the financial system. Banks may also need to comply with regulatory requirements, such as reporting to the central bank or other governing authorities. 4. Lending and credit. Banks utilize a portion of the deposited funds to provide loans and credit facilities to borrowers. Customers who meet the bank's criteria can apply for loans, such as personal loans, business loans, or mortgages. The bank evaluates the borrower's creditworthiness and, if approved, disburses the funds. The borrower then repays the loan amount plus interest over an agreed-upon period. 5. Interest and fees. Banks charge interest on the loans and credit they provide to borrowers. The interest rate is determined by factors such as the borrower's creditworthiness and prevailing market rates. Additionally, banks may charge fees for various services, such as account maintenance, ATM withdrawals, wire transfers, and more. These fees contribute to the bank's revenue. 6. Investments. Banks may invest a portion of their funds in various financial instruments such as government bonds, corporate bonds, stocks, and other securities. These investments aim to generate additional income for the bank. 7. Financial services. Banks offer a wide range of financial services to their customers. This can include issuing debit and credit cards, facilitating foreign currency exchange, providing investment products such as mutual funds or retirement accounts, offering insurance services, and more. 8. Risk management. Banks actively manage risks to protect their funds and maintain stability. This involves assessing the creditworthiness of borrowers, implementing risk controls and procedures, conducting due diligence, and managing liquidity and market risks. 9. Technology and operations. Banks rely on technology to streamline their operations. This includes maintaining secure IT systems, offering online and mobile banking platforms for customers to access their accounts, enabling electronic transactions, and providing digital financial services. 10. Regulatory compliance. Banks are subject to regulatory oversight to ensure compliance with laws, regulations, and standards. They must adhere to requirements related to capital adequacy, customer protection, anti-money laundering, data privacy, and more. Banks may be audited by regulatory authorities to assess their compliance and financial health. 11. Customer service and support. Banks provide customer service and support to address inquiries, resolve issues, and assist with financial transactions. This includes in-person assistance at branches, customer service centers, online support, and phone helplines. It's important to note that the precise steps and procedures can vary among different banks and jurisdictions, but the above steps outline the general workings of banks.